All right. Good evening, everybody. Welcome to tonight's Coffee Time session. It's been quite some time since we have run live on our Facebook and social media on YouTube as well. Welcome to join us tonight on the session where we're going to talk about where are we at the economic cycle, in the market cycle, and also where we are at in the stock market, right? And in the past 1 year, the stock market has been quite challenging. I know that some even have portfolios that are in the negative right now, in the red right now. So the question is what to do, right? Or if you are an investor, if you want to invest in the stock market, you also need to know what to do. And is this a right time to actually really start to build your investment portfolio to grow your wealth in the stock market? All right. So once again, welcome, and I hope you have your dinner. And I know it's 8 p.m. now that we already past the MCO. Most of us will be going back to work, and it's also challenging to actually find time to go back to your homes, right, from work. But nevertheless, thank you so much for joining with me tonight. I hope that tonight's session will give you some insights about where our market is and where the market is heading, so that you could potentially ride in once an opportunity in decades, right? Because right now, of course, markets are slowing down. Economies are slowing down as well, and the market sentiment is pretty much bearish, right? And if you guys are already an investor in the stock market, I hope that you can chat with me as well. You can just type in the comment section if you have any questions. You can also type it down. Then I can try to answer you guys as much as possible. All right. But I know investment has been tough in the past 2 years. And after the 2020 strong rebound that we see in the Malaysian stock market and also global stock markets, we have seen a decline. Okay, once the pandemic actually start to slow down a little bit, right? The markets are starting to pull back. US markets are starting to pull back quite aggressively as well. But our stock market has been going down, right? For the past 2 years, it has been on a negative territory based on the KLCI, right? So the question is this the right time to get in, or are we still seeing more declines in the stock market? So let me just basically share with you some of the things that we at Equities Tracker looking at, and why we think that in the next few months or in the next 1 year will probably be an opportunity for decades, right? Because we don't see this market cycle come very often. I'm just going to share my slides with you guys. And once again, if you have any questions at all, you can just type it in, right? And maybe for a start, I just want to basically know where do you think our economic cycle is currently. But before we go there, I just want to basically just share with you that whatever that is being shared today is for educational purposes only. It's not intended as any investment advice, right? But you can use the materials I share with you because these are all facts and data to do your own due diligence before you make any investment decisions. All right. So let's take a look at an economic cycle. Then we look at a market cycle, and then we look at our stock market, where we at, and what, as an investor or potential new investors, what can we do right now? Okay, that's what we want to answer, right? But before we go to that answer, we need to look at where we are at and where are the opportunities for the stock market. Okay. So if you look at the basic economic cycle, right, we have periods where economy grow, and we have periods where economy slow down. And this is not like on a yearly basis or a very short term, right? Cycles can last probably 10 to 15 years or even 20 years. And if we are able to identify where the cycles are, we could potentially identify opportunities, right? And we're going to take a look at a few wisdoms onto stock investment itself, so that we know what to do when it comes to investing, right? So we have a period of contraction when economy is slowing down. And of course, the economy will not slow down forever, right? That's the beauty about this, because bear markets are short term, bull markets are longer term, right? The period of growth is normally higher than the period when the market starts to decline, right? So if you look at this chart over here, I just want you to guess, where are we at right now? Are we at the contraction phase? Now, of course, or the decline phase, okay? And the decline will not last forever. We will have a recovery later on, and then we have further expansion. And once we have a peak, then the market starts to slow down again, right? So if you look at this data over here, right, and this basically chart, this chart here is basically from JP Morgan, one of the biggest investment banks in the world, right? So we have a period of contraction, recovery, expansion, or slowdown. So you can type it down on the comment. Where do you think we are at now? Okay, at the contraction, recovery, expansion, or at a slowdown? Okay, so if we look at the contraction period, this is where the end cycle is, end of a bearish movement, end of a slowdown, right? This is where we see activities are falling, right? Especially economic activities, business activities. Profits and companies are declining. We have easing in policies, right? This is the government policies like the rise of interest rates and also the decline of interest rates and so on, right? And in the early cycle, after the end cycle, where the bearish or where the slowdown ends, we're going to have the start of a recovery. That's when you see activities are starting to rebound, right? Activities are starting to be stronger again, right? And we can see that in companies, profit starts to grow as well. And the policy normally is still quite easy at this point of time, right? Where we probably have easy access to funding, especially, right? So you can see these cycles earlier. For example, like in 2008, the nearest financial crisis that we can see was in 2008, where most of our global economies are in a recession, right? Where we have experienced slow growth on the economy. That's when we see, the central banks in the world are starting to pump in more money in the markets, lowering interest rates, right? So that business can grow with very cheap funding, right? So you can type it down where we are at, okay? Whether we are at a contraction, recovery. Now, expansion is when we see, markets are already expanding. People are also spending. This is where there's a lot of activities. There's a lot of sponsorships going on in the markets, right? And we can see profit also will probably grow into a plateau, a ceiling where it can't grow much anymore, right? The policies of central banks at that point of time will probably be neutral because they just want to, as long as they can maintain the economic growth, okay, they will not have any strong fiscal or even monetary policies, right? And then, of course, once the market peaks, it has to slow down, right? And that's where the activity is starting to dwindle a little bit, start to slow down a little bit. You see companies' profits are starting to also feeling some pressure. And then policies like the rise of interest rates and all that, because normally when we have strong economic activities, inflation will start to rise, right? And like what we are seeing now, inflation has gone up quite substantially over the past 1 year. And that's the reason why we see a very tight monetary policies from central banks, right? So we are seeing that tight policies from governments at the moment. Okay, but of course, it will not last forever because businesses need to grow. Slowly, the market will go back into a recovery phase, and this cycle happens, right? Once every 10 years, 15 years, some people say 20 years. It really depends on what kind of time frame you're looking at now, right? So for this, where do you think we are? Okay, thank you, Agnes and Patrick. So we are looking at a slowdown, right? Which means that we're going to expect, you're going to expect that the market is going to go down some more, right, before it found the bottom, which means that if you look at a slowdown, it's just started, and we are not really at the bottom yet, right? That slowdown. If we think that we are at the contraction period, that means we are expecting the market to already starting to bottom out, right? And we're probably going to see a recovery phase very soon. Okay, so I think Agnes and Patrick, you're looking at the economy not recovering so soon yet, all right? That's what it says. Okay. Now, so for others, you can also type it down if you want. let this be an interactive session so that I know that you guys are there watching this live session as well. And we're going to continue to have these live sessions moving forward on a weekly basis. Of course, in the next few weeks, there'll be a Chinese New Year period, so we'll be taking a break. But after Chinese New Year, we're going to have these sessions very frequently on a weekly basis. So I hope that you guys are able to also promote this to your friends, right? Share this to your friends. And if you think that today's session is also beneficial for your friends, later there'll be recording on our Facebook and YouTube. You can also share this with your friends so that they too can benefit what we are about to share over here. All right. So yes, I think we are at the slowdown and we are going into a contraction period. We haven't really feel that bad yet here in Malaysia, right? But we do see businesses are slowing down because of the COVID-19. But we are also seeing businesses start to pick up, right? That most companies are going back to the normal before the COVID-19 period. But it's just that now that interest rates are high, the cost of basically getting funds are a little bit higher. We don't see a lot of companies trying to expand aggressively, right? But when they do, then we're going to have a recovery phase, right? So we are basically in a slowdown and probably moving into a contraction period, right? Now, the other part we can see here as well, these are basically the slowdown, recession, recovery, and boom. This is another way of looking at the cycle, right? And this is like a form of a clock from 12 o'clock, 1 o'clock, 2 o'clock until 12 o'clock again. So if you look at this clock here, right, at 12 o'clock, we see real estate values of properties are really rising strongly, right? So we have seen that period about 4 or 5 years ago. Okay. What we are seeing now is interest rates. Okay. What we are seeing now is also falling share prices. And during that time at 2 o'clock, if you look at 2 o'clock, right, that's when commodity prices are actually has been going up very strongly. But today you also see falling commodity prices, okay, falling overseas reserves. And this, if you look at our Bank Negara data, we're also seeing some, not to be alarmed yet, but we do see some falling overseas reserves, right? We're also seeing some tighter money. Okay, so if you look at whether we are going to go into a recession, right, a technical recession, in fact, Malaysian economy is still okay. They're still growing, but at a slower pace, right? Whereas in the US, we are actually really see a technical recession going in the US and some of the other global markets as well. So if you look at our here at this clock, where are we at, right? So you can also type it down, whether we are at 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock, or 6 o'clock, or whatever time that it is from this economic cycle. You can also just type it down, right? Okay, so if you ask me, we are probably somewhere around 4 to 5 o'clock. Like if you see the previous chart as well, where we see the slowdown phase, right? Is somewhere between the slowdown and contraction phase, lah. Businesses, like I said, are still not really aggressive yet at expanding the businesses. People are now, especially when inflation is high, people are also consumers are also be very careful with their spending, right? So most of them are in a defensive mode, lah. Okay, both the supply side and the demand side, both companies in industries and also on the buyers or the consumer side, right? So we are seeing some slowdown. Okay. Now, this is basically the general economic cycle, and this cycle just continues, right? We don't have a period where it's always growth all the while. And for the past, I don't know how long now, 100, 200 years, we have seen this cycle happening and happening again. Okay, and if we are able to find out where we are at, then it's also easier for us to find opportunities, okay, especially when it comes to investing in the stock market. Okay, so we need to look at the economic cycle first, and then now we're going to take a look at, say, the market cycle. All right. So if you are an investor, you probably have, if you've been investing in stocks, you will know the emotions attached to it, right? So if we talk about market cycles, because market is basically the participants in the market, right? Which is investors, And there are many kind of investors, right? The institutional investors, retail investors, people like you and I, governments are also investors, and so on and so forth. Okay, so if you look at this particular cycle of market, and I got this from Forbes, it makes it more interesting because it put emojis into the market cycles, right? So during the bull run or during growth period, we see excitement, right? We see there's a lot of thrill in the market. Okay, and at a certain point we see a euphoria where everybody is just gung-ho about wanting to invest, wanting to grow their money. You know, everybody just want to be part of the financial system and make money out of it, right? And then once they are in, they start to be a little bit complacent because they've been making money. They think that market is going to go up forever, right? And then when the market starts to pull back a little bit, you feel some form of anxiety, start to be a little bit scared. Okay, and when it comes down even more, then most of the investors are at the denial stage, which means that no lah, I think you know what, the decline is just temporary. It's probably gonna come back again, right? But and the market, if it continues to decline, we see fear. Okay, and after fear, it will cause a panic, right? Because it looks like the market is not recovering anytime soon. Okay, and because these investors are still holding on to their investments, it turns into anger. All right. And most of the time during the panic stage is where most of the investors who do not know where the economic cycle or market cycle is, they will start to sell their investments, right? They will start to cash out because it's just they feel the fear, they feel the panic, right? And you can see when people start to cash out from the stock market, sell their stocks, get cash back, and you can see market starts to come down quite strongly, right? And then after anger, of course, we move into a depression stage because we already lost quite a substantial amount of money. Okay, and this is where we think, you know what? I think investing cannot on. I should not invest in the stock market. No point investing in the stock market, right? And then when the market goes up again, there's a little bit of hope. Okay, and then of course there'll be some relief if those who are investing. Then it moves into more optimism when markets continue to climb, right? They feel a little bit more happier. So when we talk about stock market, it's not just the cycle alone. The cycle is basically the economic cycle, the business activities and all that, right? But when it comes to market cycles, it's really based on emotions. Okay. So again, if I'm going to ask you at what stage are we at right now, right? Which stage are we at right now? You can type it down. Now this is not the economic cycle that we talk about, not the clock, but this is more the emotional cycle of investors, right? So where do you think we are at right now? Okay, you can type it down, whether we are at a denial stage, whether we are at a fear stage right now, or whether most of the investors are panicking. Okay, or that's already done. Everybody is just fed up of the stock market. They basically feel very angry, right, because of losing money in the stock market. So where do you think we are at right now? Okay, you can type it down, those answers in the comment section. While you're typing, I'm just going to go on, right? So I'm going to also share with you some other information. Now, if you look at the cycle of market emotions, right? It is always, most of the time, right? And this repeats itself. Although we know that we should not be buying at the highs, but most of the investors, retail investors, especially people like you and I, right, end up buying at the highs. Okay, when there is strong optimism, when everybody starts to invest in the stock market, then we feel safe, right? When we talk to our friends, they say they are buying shares. When you talk to our family members, some of them are buying shares. And we talk to our friends, they're also buying shares. So there's a lot of optimism going in the stock market, right? And that's where everybody starts to buy. And until it becomes a euphoria. It's the same chart that we looked at earlier, right? But this is where most of the investors will start buying. And if you still remember in 2020, right, during the pandemic, there was a euphoria, okay, in glove making companies, right, and healthcare products, because of course in pandemic it's a health issue, right? It's a health crisis. People are investing in healthcare products, including glove makers, including all those plexiglass makers, and also healthcare products, right? So there was a euphoria, right? And after the euphoria, the market starts to come down, where a lot of people are still in a denial stage, where they think that the pandemic is going to last forever, and they think that glove companies are still very strong, healthcare products are still very strong. And then as the prices start to come down, people start to get into a fear, and then it comes to a panic, and that's where investors start to sell again. All right. So if you look at this cycle over here, there's some fear, there's some panic in the market. So we are looking at between fear and panic. There's no real panic yet, okay? But of course, that depends on the individual stocks, lah. All right. For example, like glove making companies right now, a lot of them are in a panic stage, and we can see a lot of selling. Okay. But we all have to remember that the stock market is like a zero-sum game. Okay? Whenever there's a buyer, there's a seller. Someone lose money, someone would have made money. Okay, so who actually makes money? So again, if I understand about the economic cycles, about market cycles, I can make use of this information to not go with the crowd. All right, because generally we know that most of the investors who do not know what they are doing would certainly lose money in the markets. Okay, especially in 2020 when we see a euphoria in glove making companies, right? And 2020 is also one of the best years, okay, in Bursa Malaysia in terms of the number of accounts or investing accounts being open, right? Because everybody is in a lockdown, right? So nothing to do, just open a stockbroking account and start buying glove counters. We see that euphoria. Okay, but it's not all coming down right now. Okay, those who are investing during those times are now in a fearful stage, in a panic stage, and probably some of them have really sold their positions and just forget about the stock market, right? So who actually makes money in the stock market? The thing is that, okay, of course we don't have data to show you in this area because it's very much emotional based. But time and time again, we always hear from those who are investing in the markets for a long time that, of course, there are people who make money in the stock market, but it's like a pyramid, right? The one that makes money at the top are a very small group of people, and and the bigger group of people who are losing money are basically contributing to the wealth of these guys at the top, right? So who are these guys at the top? Because if you look at some of the hedge funds, some of the fund managers, even people like Warren Buffett and all that, right? Peter Lynch, you hear all these big names. They are ones at the top, but these are a few names, right? We haven't talked about all the those guys who lose money at the bottom there. Right? So we do not want to follow that crowd. Right? We want to follow the top of the pyramid, and therefore we really need to find out how they actually invest. And the equities tracker, we basically mirror what Warren Buffett is doing. Our investing principles are all based on the value investing principles, so that we follow the best, right? And Warren Buffett is the best investor. And so if you look at this, thank you for your answers. You see some of this is very complacent, with some depression already. We don't really see complacent, right? Complacent is more like complacent is here at the top. The top is already over. They're not complacent anymore. Everybody is feeling the heat right now, right? There is fear, and that's the reason why. How do we know there's fear as well? Is that you just look at the trading volume in Bursa Malaysia. If you compare this with the previous years, you can see trading volume has started to dwindle, starting to come down, which means that if there is a fear in the stock market, not many people want to invest, right? So like I said, again, it's that pyramid, right? There are a few people who are willing to invest, and if they know what they are doing, they are the ones who's going to come out winners in the stock market in the long run. Okay, so so we are here, we are seeing selling from the retail market mostly. The question is, who is buying, right? Markets are coming down, who is buying? Okay. Now, another thing that we also have to look at is you have market and also stock market, right? And economic cycle. Now, the stock market is more leading than the economy because you don't get economy data, right, every single day. But in the stock market, you can see share prices moving every single day. So it's more leading indicator. And normally when the economic cycle is expected to go down, although the economy is still very strong, right? Because it's already at the peak and a lot of people are expecting the economy to start to slow down, we already see the stock market coming down. All right. So if you still remember, like 2 years ago, when we are already expecting the US Federal Reserve to increase interest rates, stock market has already come down, right? So it's leading. Basically, we do not know what the period is, but the standard is about 3 to 6 months leading, right? So we already see the stock market has gone down quite aggressively, but in terms of economic growth, we haven't really seen coming down yet, right? But the decline, the very strong decline in the stock market, would indicate that the economy is probably going to slow down, right? And economic data comes in quarterly, half yearly, or even yearly. So it's a lagging indicator, right? So we may see economy has not really come down very strongly yet, but because the stock market has not recovered and it's still going down, we're probably going to see the economy starting to go down even more. So like you mentioned, we are looking at the slowdown, but we haven't really seen the contraction period yet. Okay, but when the contraction period comes, we do not want to wait, because stock market normally at this period will start to recover. Okay, like if you look at this chart over here, right? The blue line is the economic growth. The red line is the performance of stock market. Okay, so if you look at when the stock market starts to go up is when the economy actually start to find its bottom. That's why we have the full recession, right? And during the full recession, normally market is already going into a bull market. Okay, so if we wait for economic data to improve, we may miss opportunities in the bull market. All right. And when the economy is recovering, when it's getting, when you see businesses are growing, you can see many businesses open, many businesses are expanding rapidly. That's when we normally see market is at the top, right? That's when we start to be fearful, right? So always remember that the stock market is always leading. Okay, so although we don't see a full-blown economic recession in the Malaysian market yet, okay, the market has already come down quite substantially. Okay, and when we go into an economic recession, right, that's when we actually see the market starts to rebound, because that's the market has already factored in that recession, right? They're always looking ahead. They're always leading. All right. So if we don't take opportunity, right, at this current stage when economy is declining, um, then we may miss a very strong opportunity when the market starts to grow again. All right. Florence said there is no fear in selling. Nobody's looking at stocks because busy with Chinese New Year. Yeah. It is during this period when we should be looking at the stock market or investing per se, when nobody's looking, right? And we all know and time again that when everybody is investing in the stock market, it's already heating up, right? But the thing is that as humans, we always have this herd mentality. We are like animals as well, right? We feel safe with the crowd. Okay, if it's basically like this. Um, you know that the markets are coming down, economy is slowing down, and you want to buy, right? But the rest of the markets, the rest of your friends, your family members, and whoever that you're in contact with, they say, well, how can you invest in the stock market today, right? Because the markets are going down, we are going to a recession, it's not improving, everything is bad, right? And we'll be thinking to ourselves, if I'm going to buy now, I'm going to be alone, right? And if the market really comes down, I lose more money. My friends do not lose money, right? I'm alone. Okay, and it's very difficult to make decisions when we are alone, because it's always safe to follow the crowd, right? At least that, okay, if everybody lose money, I also lose money, then okay lah. If everybody makes money, I also make money, right? It's okay. But I can't do it alone, right? Because it's against the herd mentality that we have, right? So that's one problem that we have to fix. Like as investors, we always have to be forward looking as well. You're not just following the crowd, because the crowd receives whatever information that you get today, which are probably late in nature, right? right? Like economic data and all that is, like I said, they are lagging behind the performance of stock market. Okay, so you can look at it both ways, right? And the market is like market is a market, right? There's always two different point of views. Some of them are looking at the market as a threat right now for your investments, for your money, but for some, right, the stock market provides opportunities. Okay? Because if everybody is looking at the same market direction, if everybody wants to buy and there are no sellers, then we will not have a market. That's what's interesting about the stock market, right? There's always two forms of opinion. Okay, but what we believe is we follow market trends, we follow data, right? Instead of hearing what people say, make sure we look at the data and find out where the opportunities are ourselves. Okay, so of course the best is to actually learn how to invest properly, right? How to actually build your investment portfolio. If you talk about investing 20, 30 years ago, it's probably more difficult to invest because we don't have any guides, right? We don't have any blueprint from successful investors that we can actually follow. But today, okay, we have seen a lot of successful investors and they have left blueprints. They have left some guides for us to follow, right? And of course, Warren Buffett is everybody wants to follow his style. But the first thing that we have to change basically is our mindset, right? So we follow what Warren Buffett, and Warren Buffett always gives certain wisdom in the stock market. There's no doubt that he's one of the most successful investor, and it's a living investor, it's a legend right now, right? Where no one else can beat him because he has been investing for more than 40 over years, and he's now one of the richest men in the world, right? But we need to follow the principles. It's not an easy principle to follow, but as an investor, if you really want to be successful in investing, we need to follow these guides, right? So investors ask him, right, how are you good at in the stock market, right? In one of the AGMs, one of the annual meeting on investors, there was a question posed by one of his investor. So his answer was simple, right? It looks simple, but not easy to follow, right? Like here he says that, for us, for him at least, to be successful, he simply attempt to be fearful when others are greedy and greedy when others are fearful. Okay, so which means that his mindset is different from the rest of the other investors. Okay, remember about the herd mentality, right? When there's a euphoria in the market, that's when everybody comes in. That's when everybody starts to be greedy. Okay? And that's a time that we should be be careful. We should be fearful, right? And right now, if the market is in a fearful stage, this is when we should start to get greedy. Okay, but like I said again, it's not easy because the herd, the crowd is now in a fearful stage. And our nature is to basically follow the crowd. We also start to be fearful. We also start to be negative about the stock market. But if we change our mentality around, right, like Warren Buffett, then we should be looking at opportunities right now. Right, but the question is how only, right? So I'm going to share with you guys later. Okay, so this is some of the data and facts and data that we have actually gotten. Again, we always make our decisions based on facts and data, so that if we are able to interpret the data correctly, not just listening by news and rumors and all that, right? But if you are able to see the movements in the market, then we are able to identify opportunities, right? So I've also shared this slide actually much earlier last year itself, when the Federal Reserve start to raise interest rates. Okay, so again, it's like, wow, this is probably the beginning of an economic slowdown when they start to raise interest rates. But you have to remember last year when they start to raise interest rates, market has already come down quite significantly because it's leading, right? Stock markets are leading. They already come down already. Okay, and the data here shows you the 8 different periods when Federal Reserve first started to raise interest rates, right? What happened to the stock market performance? What happened to the S&P 500 index after the first time the US Federal Reserve raised the interest rates? Okay, so you have 83, 87, 88, 94, 97, 99, 2004, and 15, and of course, right now, recently, right? But if you look at the previous first time when the US Federal Reserve US raised their interest rates. In the next 3 months, okay, after the US raised the interest rates, 50% of the 8 periods that we see, that means 4 out of 8 of these years, right, the market actually turned positive during the first interest rate hike. Okay, and that's where we see economic data start to dwindle, start to come down, start to slow down. Okay, but in the next 6 months, right, after the first interest rate, 75% of that 8 period that we see here, the S&P has actually gone up. So you can see that the market is already moving while economy is slowing down. Okay, and in the next 1 year after the US raised their interest rates for the first time, all of these periods, right, the S&P turned positive. Okay, so you see that the market is actually starting to move when the economy is actually slowing down. All right, so if you are seeing the economics activities are slowing down, we're probably going to see a bottoming out of the market. And remember, if you look at the chart earlier, right, when we are at a full-blown recession, we are in a technical recession, economy is really slowing down, that's when probably we see market starts to recover. All right, and it has been, the market has been doing this since those previous crises, which I'm going to share with you in a short while. All right, and we have to make use of this cycle and these opportunities so that we are able to gear ourselves to ride this trend that we're probably going to see in the next few years. Okay, so I'm going to show you this chart. Now, this is the KLCI chart, right, from 1985 until the current prices. Okay, what you see here on the chart, we simply put, is a line. This is a linear regression line. A linear regression is a straight line method to find out where the average is, right? So between the blue area and the red area, the middle line that you see there, that's the average growth of our stock market since 1985. Right, and if you follow that middle line currently on the KLCI is at 1,800 points. Right, that's the average. Okay, that's where the market should be, okay, in order for it to continue its growth. Okay, but of course, market is not a straight line method. It goes up, it goes down. When there's a crisis, it pulls back. Right, and we also have to remember that whenever there's a crisis and after the crisis, markets keep on making new highs. It gets better. Right, and when there's another crisis, again, when there's a slowdown, because it's a cycle again, right? After a crisis, the market makes a new high again. Okay, so we see our market peaked somewhere in 2014, okay, when the index was near 2,000 points. Okay, today our index is at 1,487. Right, so from the near 1,900 peak. So if the market starts to recover, we're probably going to see our index moving beyond 2,000 points. Okay, and that's where we should really get ready for this opportunity to ride on this particular trend. Okay, so the bottom line here shows you the floor of that linear regression, right? And the top line shows you the ceiling or the top of the market performance, right? And you can see here in 84, 85, that's where we are in an economic crisis or recession. Of course, in 84, 85, I was still a young boy who do not know anything about the stock market yet, right? And this is when, during crisis, is when the market starts to rebound, right? And the market makes it to a new high until 1993, 94. That's when we see euphoria again in the stock market, right? So if you have invested in 1993, 1995, that's the period where everybody is buying stocks, right? And that time there's no online investing or no online trading. You basically have to call up remisiers, right? And I remember I started during this period, okay, where even if for you to get in to call a remisier itself is already very difficult, right? Because everybody is calling remisiers. You can't buy and sell online like you see here today, okay? But you can see the market makes a new high, and of course, during a euphoric period when the market peaks, it needs to have a correction, and the correction comes in 1997, okay, where we have the Asian financial crisis. That's where our market is being attacked. Of course, that's what the story is being told now, right? Our currencies are being attacked, and that's when our then Prime Minister Tun Mahathir pegged our ringgit to the US dollar, right? And you can see the crisis, and most of the crises are a very short lived. It lasts about 1.5, 2 years before the market starts to recover again. So in 1997, 98, we are in a recession as well. And it is during that recession, market starts to rebound. All right. And it goes up higher and higher and higher until 2008 and 2009, where it started off with the subprime mortgage crisis in the US, which eventually turns into a global financial crisis and brings economy into recession again. And you can see during recession, the index fell down to the floor of that linear regression channel, right? But that's only temporary, because then we have that quantitative easing, right, where interest rates has gone to very low levels. There were a lot of money flooding to the market. And at that point of time, in 2009, market starts to rebound and push our index to a historical high again in 2014. Okay, and then since 2014, the market has gone down into a very slow decline until today. And you can see that our index is currently near the floor level of that linear regression line. Okay, it's just not moving anywhere for the past few years, right? Of course, 2020, we see a very strong rebound because of the health sector, right? But that also did not really turn up into a strong bullish trend, because economies are still quite fragile at the time. Okay, and we see that that market has been moving sideways for the past 2-3 years, but it is still hovering at the bottom or at the floor of this linear regression. Okay, so when the market is going to rebound, okay, everybody will have thought that, you know what, recession time, market is not going to rebound. We're only probably going to see rebound when markets move out of recession. That means they're starting to feel growth again. Okay, but I can bet you, right, in the next few months, or in the next 1 year, you just monitor the markets. By the time the market recovers from a recession, the stock market will have already probably moved up quite a lot. All right, because the market normally rebounds during recession period, from what we see in the data historically, right? So if we look at this particular data right now, okay, is this an opportunity in the market, or is it still a threat? Okay, I cannot give you any answers right now, but you have to look at the data itself, do your own due diligence, look at the historical performance, because the historical performance of the stock market tells us a lot of story, gives us a lot of insights about markets, how market reacts, right? And I've already shared with you all the data I can share to basically share with you and show you how to identify opportunities. And like I said, these kind of recessions or crises don't come every time. If you look at the period, it's at least 10 years. So if you miss this opportunity in the next 1 or 2 years, we have to wait again if you want to go for the big growth in your investment, another 10 or 15 years. All right. So it is really a good time to look for building your investment portfolio. But the question is always how, right? It's important to know what to invest in as well. Okay, so I'm going to come to that in a short while. Okay, so what can we do now as investors, right? So either you are already a stock investor, or if you're a new stock investor wanting to build your stock investment portfolio to right into this trend, what can we do? Okay, so for stock investors, if you are already investing right now, it is the best time to actually look at the stocks in your portfolio and try to rebalance it, right? What we want to do now is, because after any crisis, we can see whether these companies are still able to hold well or not, right? Because crises are normally a test for most companies, right? If they can't pass the test, these companies will not be able to make it, although markets start to grow. Okay, you always heard about investing, do not put all your eggs in one basket, right? So now that you have eggs in your basket, this is for investors, right? Now is the time to look at rotten eggs in your basket. You may want to remove those rotten eggs in your basket and put in better eggs in your basket, right? So look for good companies. If the companies are doing very well during the crisis period, then you may want to hold them, because these are companies that's going to recover strongly when the economy starts to recover as well. Okay, but if you have bad companies in your portfolio, even if the market recovers, you will not be able the stock will not be able to recover. Okay, so this is one thing that you have to do right now. If you have lost money for that particular stock, and if the company is not doing well, you just have to take the bullet, bite the bullet, and just remove that bad egg and put in a better one. Okay, and if you are a new stock investor and wanting to invest in the stock market, this is the best time to actually build your stock investment portfolio. All right. Okay. A lot of wealth are being created during crisis. There's also a lot of wealth are being vanished, right, or gone. Okay, but I said wealth is not destroyed, right? Wealth just transfer from those who are ignorant, okay, to the smarter ones. Okay, those who know what they're doing. It's just transferring of money. Okay, from those who do not know what they're doing to people who know what they're doing. Okay, so we need to know what we are doing, lah. Then the wealth can be passed to us, right? If not, then we will keep on losing our wealth over the long term. Right? And of course, inflation is the one that's going to eat up our wealth. Like if you can't find any investments or put your money where it can grow faster than inflation, you are basically losing your value, right? And that's the reason why we want to invest in the first place, so that we can beat inflation and preserve our capital and even grow our capital if we know what we are doing. Okay, so remember, wealth is not destroyed, but wealth is just being transferred. Okay, either from one asset class to another asset class, or when it comes to investing, on the investor side, it's basically passing from those who are ignorant, who do not know what they're doing, to a person who knows what they're doing. Okay, so it's very important to know what you're doing when it comes to stock investment. And you don't need to be a rocket scientist. You don't need to have a PhD. You don't need to be very well versed with finance to become a very good investor, right? All you need to do is to have some basic education, basic know-how, and then you can build on that. Okay. So remember, for stock investors currently, if you're investing, it's really a important time to actually look to rebalance your portfolio. Take out the bad eggs, put in the new ones. And if you're not investing and you want to invest and grow your wealth for new investors, it's really a good time to build your investment portfolio, right? So one of the things that we in Equities Tracker do is we actually categorize our stocks, right? There are investment grade stocks, there are emerging grade, cyclical turnaround. If you come to our training programs, we basically share with you all these lah. Okay, because at the end of the day, your portfolio needs to be balanced, right? For right now, for example, the only companies that can withstand crisis are investment grade companies, right? Whether there's a economic boom growth or whether there's economic decline, these companies are still able to be profitable, right? So we need to have more of these investment grades right now in the portfolio. Okay, and when the market is really, the economy really is in a recession, okay, and we know that all these growth companies, emerging grade companies, they will suffer the most. Okay, because they are not a blue chip investment grade company yet, but they are very good, but they're just going there, right? But of course, because of the crisis, their performance has gone down as well. But as long as the company is good, it's good time to actually now start to balance your portfolio again during times of crisis, so that you probably have a little bit more emerging grade stocks than your investment grade, so that when the growth really comes again, you can write much more. Okay, so this is how sometimes we can rebalance our portfolio. All right. So investment grade stocks risks are very low. Okay, but of course, the performance may be also smaller lah. So we really need to find that balance. Okay. So yeah, basically that's what investors should do right now. And of course, in Equities Tracker, we try our very best to help investors to write and to profit and to grow their wealth through investing, right? And Equities Tracker, we have been around for since 1976. That's when the company started, but we have been educating thousands of investors for the past 20 years. All right. So what can you do right now? I know it's already 8:50 p.m. If you guys have any questions, you can type it down, right? I'm going to end the session right now, but don't go first because I'm going to give you a few announcements what you can do right now. We're going to have an investment day on the 11th of February, all right? And this is basically going to be a free event. It's open to public. If you have friends who are interested to invest in the stock market, you can invite them there. Just share with them the link. My colleague will share the link in the comments so that you can actually just click on that link to register. You have to register. It's going to be for free. It's going to be on the 11th of February after the Chinese New Year. All right. It's going to be a morning session from 10 a.m. to 12:30 p.m. We're going to share with you with more details. Right. So click on the link, then you'll be able to see more details on what is going to be shared during this seminar. Okay. It's not going to be online. It's going to be physical. It's going to be held in our office here in Petaling Jaya at Symphony Square. So you have to come to the office here, and this is where we're going to present to you even more details on what to do, right? So today I'm just giving an overview of showing you some of the bigger picture, right? If you really want to deep dive into what stocks to look at, what trends to look at, and how to do it, then this will be the best seminar for you to come on the 11th of February. Okay, so if you think that you have friends also to interested to really want to capitalize on this once in a decades opportunity, just bring them in, just share them the link, get them registered, and you can see them on the 11th of February as well. All right. So the link is there. You can use your phone to scan the QR code to register yourself, and please do share with your friends if you have any friends who are interested to invest in the stock market as well. Right. So remember, 11th of February. Please book your date because we don't do this event very often. So please, if you really have time and really want to look for opportunities in the stock market in 2023, then join us on the 11th of February. All right. If you want to fast track and I want to learn how to invest immediately in Equity Tracker, of course, we have training programs. And one of the programs that we have is called a value investing program, right? It's a 3 days class where we're going to go really in depth on how to select stocks, right? Based on really systematic approach to identifying which are good companies and which are good to invest and which are not, right? So we're going to look at fundamentals easily. So don't be afraid if you're not financially savvy, you don't know how to read financial statements and all that, then it's more you are more encouraged to come, right? Because this is basically built for non-financial graduates, non-financial literate as well. So if you don't have any financial accounting background, no problem, right? Because like I said earlier, investing is actually quite easy if you know the principles on how to invest. Okay, so this is a 3 days program. We normally charge the price for this program at 4,998. But we are having a special discount, right, for Chinese New Year. So this is an ampao that we can give you to you guys. It's going to be 3 day session, and in Equity Tracker, we also have a 100% money back guarantee policy, where if you after attending the 3 days, right, the whole 3 days, it's not the first day, not the second day. After attending the 3 days, and you see that I did not learn anything at all, it did not really benefit me, we'll return your money with no questions asked. Okay, so this is a risk-free for you guys to come in and learn. All right. So our next English session is actually on the 24th to 26th of February. And the discount, we're going to give a half price discount. So all you need to do is to pay 2,499, which is about 2,500 ringgit. The link is going to be provided, or you can do a scan on your phone on the QR code to get more information. And also, if you need to reach us, you can just also type in the comment section there, right? So it's only 2,499 for a 3 days class, right? Where we learn about value investing principles. And value investing principles are basically from Warren Buffett. Okay, so we try to unlock what he tries to do, and this is what we do in Equity Tracker as well. Okay, so again, just click on the link if you want to sign up, because the seats are limited on the 24th to 26th. If you got really no time and you really want to know how to make money, how to build your investment portfolio, then just join us and have an investment of 2,500 ringgit. All right. Last but not least, we're also going to have a Singapore stock market outlook this weekend on the 14th of January, Saturday, right? So if you are interested to invest in the stock market, we actually have a guest who is the head of research for Philips Securities in Singapore, right? Mr. Paul Chu. He'll be sharing his market outlook, and I will also be sharing on how you identify these companies, or how do you find opportunities in the stock market using a tool that we have just recently developed. All right, so this is a free seminar as well. It's going to be also physical. You have to come to our office between 10 a.m. to 1:30 p.m. this Saturday. All right. So seats are also limited. If you click and you can't register anymore, that means the seats are full. So take this opportunity right now, because we still have a few seats available. And also, if you have friends who are investing in the stock market, who wants to know more about the stock market and the outlook for the stock market, Singapore stock market for 2023, please do share this with them as well. All right. Okay, so I'm just going to open for a few more minutes. If you have any other questions, you can just type it down. Because if there's no questions, then we can end this session. But really, I do hope to see you guys, at least if you can't make it this Saturday. I know Chinese New Year is just around the corner, but do join us in our Investment Day event on the 11th of February. All right, and bring your friends as well, importantly, so that you can learn together and benefit together as well. Okay, so if there's no question, I'm just going to put in a few seconds here before we end the session. Yeah. Okay. What sectors to look out for 2023? Good question. Come and join us on the 11th of February, Florence. Right, 11th of February. Make sure you share this with your friends as well. Good things have to share with your friends, right? So 11th of February, just click on the link that's provided there to register for the 11th of February. That's where we're going to look at the sectors. So we're going to dive deeper, okay, into looking for opportunities. Too bad you'll be traveling. Okay. Well, do reach us out. If you're okay, we'll get our representative to contact you. If you are already our client, if you attended our course before, we would have your information. We'll give you more information on the next events that you can actually attend. All right. So with that, I want to wish everyone thank you so much again to attend to this event. Like I said, we're going to continue to have these events after the Chinese New Year on a weekly basis. So please spread this out to your friends. The more people that we get, the more encouraged we are to share more information with you guys, right? So we hope that you are able to share it. More people come in, then we're going to continue this show for the rest of the year, or even continue to, as long as we have support from you guys, right? So please share this with your friends. Thank you so much once again, and happy Chinese New Year, Kong Si Fa Chai, for those who are celebrating. Thank you.